Thank you. Thank you for the promotion to a doctor. I'm not a doctor, medical or otherwise. So thank you for inviting Standard Bank and myself to this session. I'll be talking about financial inclusion through digitization. But I'll start by introducing who Standard Bank is, just in case you don't know who we are. And I say that on purpose because most people think we're a South African bank. Our group chief executive, Sim Shabalala, likes to call us an African bank headquartered in South Africa. There's a difference. An African bank headquartered in South Africa, originated from South Africa. But our African businesses are making about the same amount of money as our South African business. So we're an African bank headquartered in South Africa. We're present in 20 sub-Saharan African countries. We've got 4 global centers, Beijing, Dubai, London, New York, and we've got 2 offshore locations, one in Isle of Man and one in Jersey. As many of you know, we partnered with the biggest bank in the world, ICBC, Industrial and Commercial Bank of China, a few years back. So we connect Africa to the world and the world to Africa. That's our strategy. Africa is our home. Africa is our home. We drive our growth. And we put our money where our mouth is. We had international businesses in other markets. We sold down and put our capital in Africa. So that's who Standard Bank is. Why is financial inclusion important? 1, it alleviates poverty, as we know, promotes economic growth, and helps to reduce income inequality. I'll just click my slides, I was told, yep. Although there's been significant growth in financial inclusion, there's still a lot of work to be done. For example, there's, as one of the organizers says, data differs depending on where you're getting your data from. We are told that account ownership has doubled to 49% since 2011, but it varies depending on what country you're operating in. South Sudan, 6%, and Mauritius, 91%. So there's a wide range of inclusivity. What are some of the problems causing lack of financial inclusivity? Mainly lack of funds, but there are others. KYC documentation. The panelists talked about, distance between brick and mortar. A lot of banks are shutting down branches to cut costs and going digitized. But unfortunately, if we're true to ourselves as bankers, we're not listening to customers because they want to have personal interaction. And we have to try and strike a balance between digitization and, in-person connection. The cost of financial services is increasing year in, year out, and no access to phones. So these are some of the barriers to financial inclusion. At Standard Bank, one of the things that we're trying to do is create products and services across the continent to drive financial inclusion, customizing our products and services for the unbanked, and trying to grow customer confidence in some of our products. And I'll talk a bit more about some of the things that we're doing. Just a point to note, solving for financial inclusion is not one person's problem. The MNOs have done quite a lot, the fintechs have done quite a lot, the banks are doing quite a lot. It's really important that we partner together, both banks, fintechs, and MNOs, to help drive financial inclusion. And Standard Bank has done this across many of our markets, partnering with MNOs and partnering with fintechs, government, and regulators to try and drive this key agenda for most of our economies. So what have we done as Standard Bank? In 2023, we set a financial inclusion target for ourselves to provide decent economic growth while ensuring access to adequate, safe, and affordable housing. It was focused on 6 pillars. The first one is around providing SMEs and entrepreneurs with low-cost accounts and services. There's a platform we have called Unayo. I'll talk more about it. There are a couple of platforms we have, depending on the market. So we've got Unayo in the SADC region, We've got FlexiPay in Uganda. We've got what we call PayPals in Namibia. And in West Africa, we've got another platform that we use there. So in providing SME and entrepreneurs with low-cost accounts and services, we've seen significant improvement in financial inclusivity. Our Nayo platform currently has 710,000 users, about 38,000 merchants, and we've disbursed about 1.2 billion to about 168,000 recipients on behalf of government, and in some instances, United Nations. So these platforms we use to disburse social grants, and there was a picture of a particular country, I won't mention it, where before we did this disbursement, you actually have to go on a ferry, really rickety ferry on water to get to the village to disburse funds to them. That's how bad financial inclusivity was in this market. But with this solution, you can't get away from cash. So it's a combination of digitization and cash to try and include the customers. One of the other things that we're doing around the SMEs and entrepreneur space as well is partnering with development organizations and foundation. In a particular market where we operate, there is a foundation that is looking to reach 7 million women in 7 years with $100 million. 7 million women in 7 years with $100 million. And what's the catch? It's through digitization. So they are willing to invest in, we've got this app called Chama that does collective savings. And we've got another app that uses scored lending to lend to reach women. So they are willing to partner with us, invest in these technology tools to reach women. So lots of things are being done to try and drive financial inclusivity in Africa. We've also provided access to finance, training, networking, and marketing opportunities for clients. We're very particular about gender and youth, so we've provided solutions tailored for women through access to funds. One of the things that you find is access to finance is a big problem, especially for women entrepreneurs. And to include them is not just about payments, it's about payments, collections, and being able to give them loans. In one of our markets, we partnered with a foundation. It's quite touching because it's a remote region of a particular country in the north. But through some of the work that we did with MasterCard Foundation and some other foundation, we were able to provide about $3.5 million to about 95,000 women. These women were the ones who are the family breadwinners, and families could be sustained through this access to finance. What are some of the other things that we're doing? Providing solutions tailored for young people. In South Africa, we've got a Phoenix platform. It's a crowdsourcing or crowdfunding platform where students who can't afford to go to school get support through crowdfunding. We've seen very, very great success here, in providing access to the youth. We also provide customer education for individuals and businesses. And then under target of creating sustainable cities and communities, we've extended a total of about 2.6 billion to over 5,000 people. So these are the 6 pillars in which Standard Bank tried in 2023 to empower financial inclusivity in the markets that we operate in. So let me come to the detail of the topic. What are some of the tools that we've used to drive financial inclusivity? As the global mobile money market continues to grow, it was imperative for us to respond with solutions that are both highly adaptable and easily replicable. So we rolled out Onayo in mainly SADC region and Malawi, PayPals in Namibia, FlexiPay in Uganda. These platforms are more or less the same, but they are nuanced for different markets and different clients. So what are they? Low-cost wallets and accounts, some of which operate on mobile phone number, instant onboarding, bulk grant disbursements, including social grants, of which I've talked about, send money, cash in, cash out, value-added service like airtime purchases, electricity bill payments. We also facilitate mom and pop shops. In South Africa, they call them, I believe, spaza shops. Collection through QR code and therefore we enhance scan to pay. The idea is to ultimately improve these products by including savings, mutual funds, insurance, lending, medical, education, and so on and so forth. We are using these platforms in different sectors of the economy to drive financial inclusion. In the agri sector, we pay outgrower farmers. In the construction sector, we make payment to construction workers who sometimes don't have bank accounts. So these are some of the digital products that we're using to try and impact the economies that we work in. So what successes have we gained in what we've done? As I mentioned on Unayo, we've seen significant amount of progress there. In South Africa, we've got another digital platform called MyMo. It's a low-cost transactional account driven by either the app or internet. We've tried to reduce costs of entry just to, remember I said one of the barriers to financial inclusion was cost. So we created this low-cost account just to try and, draw people into the banking sector through reduced fees and so on and so forth. We give you a free SIM card. So far, we've been able to impact 2.3 million active customers on this with balances of about 6.9 billion rand. So we're doing what we can in the markets that we operate in to drive financial inclusion. So MyMo is for the individual customers. We've got MyMo Bees, which is for the business customers. Same concept. Reduce cost of fees and draw businesses that otherwise would not come to banks to come into the banking sector. Instant money in South Africa. We've given access to customers to redeem vouchers in over 50,000 locations, including major retailers, selected spaza shops, and Standard Bank ATMs. Instant Money Wallet is a pay-as-you-go transacting solution. You can also do vast services there, airtime, data, electricity, and so on and so forth. So these are some of the things that we've done in South Africa and in the southern markets. I talked about FlexiPay in Uganda and PayPulse in Namibia. Same thing. What successes have we achieved? In Uganda, 820,000 wallets, 30,000 businesses, 9,300 agents, and a significant amount of funds have flown through these platforms. Same thing for PayPulse in Namibia. This platform is one that we think is ambitious for us. It's targeted strictly at the agri sector. It's called One Farm. And there are 3 dimensions to it. It's about, growing, trade, and impact. Let me explain what I mean. Right now, if you go into the farming sector, it's difficult to learn to outgrow farmers or small-scale farmers. Very difficult because there's no data. So what this platform does is you've got an anchor and you've got your outgrower farmers. And then you connect them together. Based on the data you gain, you're able to lend to these smallholder farmers. And then the anchor guarantees, these payments. We're able to get data as well. We're able to almost check crop quality and also check yield on the crops. So these are some of the things that we're trying to do in the agri sector. So this platform is specific to the agri sector. The outgrow farmers, the farmers will also be able to make payments, get lending, and so on and so forth. On this platform as well, we've created a digital market. So farmers that don't have access to sales, can sell their wares on this digital platform. One of the challenges a farmer has is when he produces excess and he can't sell and it's going to waste. On this platform, we also connect funders and donors to buy, this produce and donate to others. This worked really well in South Africa during COVID. Standard Bank, through this One Farm share, was able to do a lot of donation of food, to the less privileged. So I'd like to conclude. To boost financial inclusion, we need to address the barriers to financial inclusion by partnering with governments and with ourselves. No single industry can get it right. We have to work together. All banks, MNOs, fintechs, to get people included. The panelists talked about AI. There's a role for AI in financial inclusion in terms of getting data and collaborating to offer improved and more affordable products, AI-based educational platforms that can also advance financial literacy and empowerment. We have to maintain focus and keep assisting the young people to get financially included. They are all on their digital phones. Really, if we test it, some of them don't really care about banks, to be honest, as long as a fintech can provide me with ability to pay, ability to receive, and so on. But the banks have a role to play. Why? Because the banks have the source of capital and liquidity. Most of the fintechs don't have the liquidity. At some point, you run out of capital. Banks are the ones that have the sources of liquidity. And therefore, we have to play our role with the fintechs. At Standard Bank, our goal is to continue to impact lives in the economies we operate by providing access to funds, access to markets, and we hope that in the job that we do, we create jobs, and it helps us fulfill our purpose of Africa is our home, we drive our growth. So thank you very much for the opportunity, and I hope that was useful to you. Thank you.